Hi everyone, welcome to another Weekly Forex Forecast for the week ending May 22nd, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the US dollar versus the Canadian dollar, as well as the New Zealand dollar. And we're going to wrap things up with gold or XAUUSD. The EURUSD continues to consolidate, but we saw some pairs break out last week, including the NZDUSD and also gold. So I'll talk about what's next for those markets. Alright, so let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. The EURUSD continues to consolidate within this wedge pattern that I've mentioned for the last couple weeks. So you can see where we had this retest last week of the 107.80 area. So not only is this a key horizontal level, but it's also the bottom of this wedge that's formed over the last few months. I do maintain a short here, which I initiated right around 110, and I also announced that in the members area. I've since added a few times on the way down, so right now my average price is well in profit. However, we also saw the pair retest that area just below 109. So this is going to be key resistance for the coming week, and of course the bottom of this wedge pattern, along with that 107.70/80 horizontal area, will be support. Now keep in mind that 107.70/80 is the bottom of that multi-year trend line. So if we move out to the monthly time frame, you can see where we have this trend line that extends from the 2000 lows, and this level lines up exactly with that wedge pattern we just looked at on the daily time frame. So in my opinion, as I've stated recently, I think it's going to take a monthly close below this trend line around 107.50, maybe just above it, in order to confirm the breakdown. So as long as the EURUSD is above this level around 107.50 on a monthly closing basis, this trend line is intact. However, just given the way that the pair is leaning on this level and it's unable to bounce from it, I do think that a break lower is likely over the coming weeks. But in the short term, it's all going to come down to whether or not sellers can break below this 107.70 area on a daily closing basis. If they can close the pair below that area, we should see this region through here become resistance. But until that time, this area just below 109 is going to be resistance, with a close above that taking on this wedge resistance up here and perhaps that 110 area. All right, so these are key levels I'm keeping an eye on. I still have a short on here and I still like the bearish outlook for the pair, but it is going to take a close below that 107.70 area. The pound against the USD played out perfectly for us last week. If you look at last week's forecast video, you know that I was looking for a breakdown below this wedge support. So we've been watching this wedge pattern now for the last few weeks, where we have wedge resistance is actually the bottom of this channel back here, and then we have wedge support. Now, as always, it was going to take a close below wedge support in order to send the pair lower. So notice how we had a daily close below wedge support on this candle, and we then had a retest of that 123.60 resistance area. All right, so this right here was the area to get short. And as you can see, we've had a move down to not only 122, where it did catch a bid for one session, but we've also now had a close below that 122 area. That means that for the week ahead, 120 is going to be exposed with 122 acting as resistance. So if we see the pair come down and take out 120 on a daily closing basis, that of course would open up 117.80. But as of right now, all eyes will be on 122 to see if sellers can defend that area. And one quick note here, this is something that I talk to members about a lot, where if you don't get a retest, we did in this case, but let's say that the pair had closed below wedge support, didn't retest it, and just moved straight lower. What you could do here is look at the price action and see how the pair is reacting around this key level. So notice how back here we had a retest and then the next session sold off. Okay, retest, sell off. Back here even we had a retest. The very next session started to move higher. Look at what happened here. We had a retest here. The pair barely held above support. We then had another retest here and another one here. Okay, so we had 4 sessions here that retested support, and that's a sign of weakness. That's a sign of increased selling pressure, the fact that the pair is unable to move off of support and retest resistance. So it's this type of heavy price action that allows me to often front run a breakout. In other words, I can get in through this area ahead of the breakout in case we don't get a retest. So I hope that helps some of you that struggle with, do I wait for the retest or do I just enter on the breakout? You can actually enter before the breakout if you just start to watch how price action reacts around these key levels. Next up, we have the dollar CAD, and I spoke about this one on Friday. I posted on the blog about it and also made a members only video. Now, there are a few things I'm watching here. The first is that after this massive rally back here, we had a lot of profit taking, and now we've had consolidation. This consolidation is outlined by a descending channel. All right, so this is the type of price action that I look for as a continuation play. I like to see this because it's an exchange of hands. In other words, the pair is basing for what could be the next leg higher through here. But as I mentioned on Friday, it's going to take a daily close above channel resistance right around 141.30/40. All right, so this area right through here, you can see where Thursday's session encountered sellers. It's going to take a daily close above that in order to expose 143.30/40 with a close above that taking on the year-to-date high up here around 146.60. Furthermore, one thing I pointed out on Saturday is notice how the price action acted within this channel. So just like we talked about with the pound, look at how we had this retest of channel support, we had this retest of resistance, the pair then came down to support, resistance, but then look what happened right here. The pair never retested channel support. And this is a sign of increased demand. All right, the fact that the pair did not come back and retest support, we then moved higher into resistance again, came down, and then we made a higher low. All right, and then notice how the dollar CAD moved right back into resistance. So all of this through here, the fact that the pair did not retest channel support down here, and it also started to make higher lows, is a sign of increased demand. So the more the pair presses into this resistance area and continues to make these higher lows, the more likely it is that we see a break higher. Now, that does not mean that the dollar CAD will break higher. There are no guarantees in this business, but as long as the pair is making higher lows into resistance, I do like the idea of a break higher. Now, if we see the pair come out this week, move lower and take out some of these lows, that would be a sign of weakness and could also indicate a move back into this channel support. However, if we see a daily close above 141.40, that would expose 143.30/40 and perhaps 146.60. So I've liked the idea of a lower New Zealand dollar for weeks now. It was just going to take a close below that channel support right around the 60 handle. All right, so notice how the pair came into that area last week. It bounced from it on Thursday and even formed a small bullish pin bar. But this is a case where you have to pay attention to the candle size. And in this case, this bullish pin bar right here was incredibly small compared to the candle before it. And also furthermore, this channel right here signals consolidation that within a downtrend like this often serves as a continuation pattern. Furthermore, if you look at the weekly time frame, this is something I pointed out last week, but the weekly time frame carved a bearish engulfing week. And this was in play even in the final 24 to 48 hours of last week. So notice how this candle engulfed the previous one, and it also formed at a swing high. So the fact that we have a weekly bearish engulfing candle at a swing high does signal weakness. All right, so we've got a weekly bearish engulfing candle. We've had a break below this channel support, and we also have on the monthly time frame, as I've mentioned in past videos, we do have this break in March below this multi-year trend line. So just like the EURUSD, we have a trend line that extends from those 2000 lows, and we've already had a confirmed break below it. Furthermore, there's actually a head and shoulders pattern here that broke down several years ago where we have the left shoulder, we have the head, and then we have a right shoulder. All right, so this pattern right here, as I've mentioned recently, does point to a measured objective around the 40 cent mark, which is those 2000 lows. So that's the big picture for the New Zealand dollar. But in the short term, it's all going to come down to whether or not the pair stays below this channel support right around the 60 mark, with key support coming in at 58.60, followed by 56.50. The only thing that would reverse my bias here is if we see a daily close back inside of this ascending channel. Gold, or XAUUSD, finally broke out of its wedge pattern last week. So this was all consolidation up here after this massive rally. So we had this rally and then we had consolidation in the form of a wedge pattern. So this pattern, as I mentioned last week, was likely to be a continuation pattern, but we did need to see it close above resistance in order to confirm that. So for the week ahead, we have 1720 as support and of course 1740/50 that I've mentioned recently as resistance. Now I still maintain the fact that the objective for this wedge pattern comes in right around 1800. So if we take the height of this pattern and measure from the breakout point, that gives us a target somewhere up around 1790, maybe 1800. But it's going to take a daily close above 1750 in order to expose 1800. Alternatively, if we see gold rotate lower and take out 1720 on a daily closing basis, that would be a bearish sign in my opinion. Now, before I close out this video, I do want to point something out, and this is similar to the pound and also the dollar CAD. So if you look at the price action here, and this is something that I mentioned to members last week before gold even broke out, where you have these higher lows into resistance. All right, so notice how gold started to form this wedge pattern. And once it got to this point here, we could then start to draw this wedge. Now, notice what happened ever since this low down here, where we had a higher low, move up into resistance. We then had another higher low and another retest of resistance. So just like we've seen with the dollar CAD, we got these two retests of resistance without a retest of support. And that shows an increase in demand, which foreshadowed this bullish breakout. All right, so this is just one more way that you can get into a market before it actually breaks out. If you start to see price action like this, where the market starts to pressure a key level without retesting the other side of that pattern, that is a sign that a breakout is coming. All right, so this is the type of price action to look for where you can get in before the actual breakout in case we don't get a retest, because as of right now, gold has not retested the top of that wedge. Now, that's not to say it won't happen this week, but in case gold just continues to move higher and you're left wondering, do I chase or do I wait for a breakout? If you had been watching this price action through this area, you would have seen that a break higher was the likely scenario. All right, so in summary, 1720 is going to be support, 1740/50 is resistance, with a close above that taking on that 1800 area. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.